What's up, everybody? So, I want to give you guys a quick review of the best trade that we took today. And what we're going to do is look at SPY macro analysis on the 4 hour and or 1 hour. We might not have to go into the 1 hour, and then we'll go into the smaller time frames on SPY and show you how we actually traded it. So this is what we went over in the pre-market analysis today before we had live trading. The game plan was really just watching probably the most important level that we have on SPY throughout October, and that was right here at about 575. We can see towards the end of September, for about a week, this held as a resistance. And then in the beginning of October, we ended up holding that resistance as a support. So you can see the break of that resistance for multiple days, how we held higher, right? Buyers came in there instead of sellers like last time, and we built into a new all-time high. So that 575 continued to show its importance. Last week on Wednesday, the big sell-off that we had from all-time high, where did we bounce off of? We bounced right off of that 575. And we pushed back into all-time high. Once again, we pushed back into 575 this morning. So the game plan was to really watch what happened at this 575. We know that if the market started to break down, there would be a structural breakdown, right? You have the all-time highs up here, which price has been struggling to continue to break out from for a few weeks now. You have this very important level from October, the 575 I just explained. And then you have, of course, this lower zone. And that's what the market has been doing, right? Trading sideways for a week or two, new all-time high, trading sideways for a week or two. So the best trade opportunities, of course, we can trade within this range. As a day trader, it's a very big range. But the best opportunities would be to look for that continuation higher, similar to this move in here, or, of course, look for that breakdown, right? If this support finally gives out, that could be a big push to the downside back into this channel. So let's get those key levels back. And that was our game plan, right? Looking for the breakdown, looking for the continuation below the 575. And if we did start to bounce, if we continue to hold support, then we could find a trade opportunity too, right? Maybe above the pre-market high, maybe off of the gap fill. There's opportunities up there, but as of now, we were looking for that downside move. So let's zoom into SPY. We're going to be viewing the 1 minute, the 5 minute, and the 15 minute. Now, as you guys know, I like to watch multi-time frame, right? Multi-time frame analysis helps me stay away from tunnel vision. If I'm only staring at the 1 minute, then I see a lot of fake outs, a lot of noise, and maybe some people can just stare at that and trade it well. But for me, watching the bigger time frames, it gives me a sense of what's going on, throughout the day in the pre-market. It gives me a sense of the macro as I'm also viewing the micro. So game plan, right, was to watch what happens at that 575. So I'm going to zoom in and zoom in here as well. And let's just hit play and see what happens on the open. No strength at 575, right? We bled right through it. So we're already starting to see weakness here. Now, I'm not just going to jump into a trade because one thing I want to remember is that there is data coming out right here at 9:45. And we watch that with our market moving events calendar. We go over that every morning, right? And it's important to be aware of when data drops in the market because usually we see a big move. We see continuation, we see a reversal, but more importantly, volume comes into the market when data is released. And if you're in a trade, that can definitely have an impact on the trade. Sure, it can bring you into more profit, but it can also hurt you. So my rule is when we have data in the open, that's very important. We either have to have a very high quality entry, risking that trade before data, or we just wait until the data comes out and take advantage of the volume that comes into the market after that data or during that data is released. So being aware of the data coming out, only looking for a really high quality trade. We really start to continue below that 575, and then we actually build back into it. So maybe we're getting a retest off of it, right? Maybe we're dropping, retesting it, and then we start to get that flush. Something like that would get me into a trade before the data came out, but let's continue to wait, right? We have no reason to be trading this just yet. Start to push back over 575, retest it. Okay, so now we're actually retesting it as support. So I'm glad we didn't jump into those puts because we'd be in the red, maybe hitting a stop loss right now. Now, we didn't want to sell off. We're not really building to the upside. Data's about to come out, and that's all I've seen, right? A pull into the support, a bounce, and we're starting to have a buildup. So there's actually two good opportunities from here. If we pop on data, we'll be breaking out. We'll be coming off that 575, and we know that The last few times we've came off of this level, we've had really big moves. So we're open to the idea of potentially going long here, but we also understand our game plan and the weakness that we saw in the pre-market. And if this becomes a lower high and we start to sell off back below 575, that could be a reason to get into the trade. Selling on open, lower high into a lower low, the build up above 575, right? If that is a lower high and we see the break back below our key level, that could be an entry looking for the downtrend continuation. So I'm going to hit play. Data comes out and bang, we get that drop back below the key level at 575, and that gives us confirmation to get into the trade. So at this point, just setting up that quick risk to reward. Stop loss is a little bit above the key level. Target is down at that 5715. So let's give myself a little bit of space here too. All right, beautiful. Don't know what happened there. Hold on. All right, there we go. That's good enough. Doesn't have to be perfect. Why did I put my stop loss above the key level? Because what if we start consolidating? What if we retest the key level? What if we push a little bit above it, right? That is how a stop hunt happens. That is exactly how you get faked out of the trade, and then big profits come in. And we've all had that happen to us. So I don't like setting my stop loss in the traffic. I allow myself to take a little bit larger of a loss because that's something that doesn't fake me out of positions. It counters the fake outs, and it also improves my win rate, right? Because I'm not getting out of these, small paper cut losses all the time. I'm giving my trade enough room to develop because it's a buffer zone, right? Who's to say that I'm always going to be buying the top, always going to be buying the bottom? And who's to say that these key levels, although important, who's to say that this is a magical wall where prices, once below it, it's never going to come back above it? Sometimes that happens, but it's common for that not to happen, right? And we need to be able to adapt to those situations. So as long as I have a good risk to reward, which in this case, we have over a 3-to-1, I'm very comfortable with letting this go about $1 against me before being invalidated. And I can also tell if it's invalidated. I don't know why I paused. I can also tell why it's how it's invalidated before it really moves into a high of day, right? If we build back above 575 and start gaining support like we previously did here, that could be a reason to exit before really hitting that max loss. To the downside, we have that target. And now the main focus is, how does price develop after I get into the trade? Now in live trading, we took 0 days till expiration. So we were really focused on a downtrend holding on the smaller time frame. Right? We want an aggressive move to the downside. We're holding 0 DTEs. Those are options contracts that expire the same day, and it's going to be volatile. So if we have moves against us, well, you could see your trade go from 40% profit to break even or potentially even red, right? If you have that big of a pullback. So 0 DTEs, focused on quick price action, and focus on how price develops after we get into the trade. So what I'm looking for right here is a flush into new low of day. Right? We've had our move down, our lower high. So if we're in a downtrend, what we're looking for is that lower low. Let's hit play and see what happens. Start to get that extension to the downside, and we're taking our first trim as we push into the lows, right? We're trimming as we push, as we extend. Continue to let this trade. Now you see we start to have a little bit of a buildup around here at 573. So I'm realizing that the downtrend isn't holding, right? It isn't holding that initial very aggressive move, and that's okay, right? Most people are going to see a green candle. They're going to see a move against them, and they're not going to think about what's happening. They're just going to react to it emotionally. And when you do that, right, you're taking yourself out of the trade. You're not allowing for this thing to breathe, to develop, and it's like cutting a flower as it just begins to bud, right? We're barely near our target. You have to make your reward worth your risk, because you may set up a good trade, you may have a good entry, you may have a good risk to reward, but if you're getting quickly out of your trades and all of your exits are at 10, 20% profit and all of your losers are the same size, it's going to be very difficult to be profitable. So we have to let this trade develop. We have to give it room. Price does start to pull against us, and what we're focused on is the downtrend, right? You can see price pull against us right now. It's hitting my trend indicator. And as long as we reject the trend indicator and stay within it, then I'm perfectly comfortable in this trade, right? Because I know that the downtrend is holding. And that's what I'm able to use to invalidate my trade. So we're pulling into it, and you can see we get a nice reversal candle here. Found a floor, had a good push above the 9 EMA, pushed into the 21 EMA, and we got a reversal candle near that initial low. And take a look at that, right? If we put a level at that first low of day, Look at what we retested. We retested that exact area we broke down from. This is essentially a perfect downtrend, right? That's exactly what you want to see. So when you have a move against you, don't panic out. Realize that it's not about the candle that's happening. It's about the bigger move. It's about the trend that is occurring. And you need moves to the upside if you want to go deeper. Same as if you're bullish on something, right? You can't have rigid expectations and just think that the trade's just going to go like this. It's probably going to find a trend. It's probably going to have ups and downs towards your target, and you have to be able to deal with all of these times that the move happens against you. In this case, right here, you're having that move against you, and you need to let it develop. If we start breaking back over this point, we're going to be over our moving averages. We're going to be over this key level, right? And that's something that we can get out of the trade. But what if we don't? Then we need to let the trade develop. And the issue is people don't wait for one of those answers, right? Traders just see the attempt happen. They see this back test and they act off of it. Instead of seeing a close above and acting off of the data, or seeing a rejection and let the trade develop, they jump the gun. And sometimes them doing something is the worst thing to do. Sometimes the best thing to do is absolutely nothing. So we have that pull against us, testing that recent low, and we can look for more confluence, right? Testing our moving averages. I see the 5 minute testing the 9 EMA. We hit play, and we start to reject. Take a look at how that 5 minute candle is forming as I hit play again. Take a look at how this price action is making that lower high and pushing into the lows. You can see us pushing right into those lows. And that is a perfect downtrend continuation, right? We have the high of day, the lower high. The lower low. The lower high, the lower low. The lower high. We should be looking for what? We should be looking for that push below 573 and a move into a lower low. So at that point, we start to break down. We take another trim as we extend and continue that downtrend. At this point, we're pushing into about 100% profit, and I'm getting out of my runners. Now, that's a great trade, right? Even though we didn't hit our target, even if we fully exited at this point, that is a very good trade. But how could we have potentially held this longer? Because this trade, believe it or not, it didn't go for just 100% profit. It went for over 200% profit. Well, if you're in 0 DTs or you're watching the smaller time frames, you have to deal with volatility, right? That's just part of trading. So what you can do is not deal with volatility. You can buy 1 day till expiration or any further expiration contract, and full point moves like this against you, they're not going to hurt as much, right? So you'll probably be able to stay in those trades longer and allow for more volatility. Or if you are holding the 0 DTs, you just have to be ready for that volatility. You have to be okay with the idea that this trade may go for 100% profit, back to 50% profit, and you watch half of your open P&L disappear. But of course, you're focusing on the bigger move, expecting that this will continue and you'll go for more profits. It also helps when you're watching the bigger moving averages and or the bigger time frames, right? So I'm having a breakout of this downtrend on the 1 minute for the first time today. I'm starting to see it break out and develop. And if we do continue to push from here, I can get out of the trade. But if I'm watching the 5 minute, we're beautifully holding that downtrend. You can see it in here. Every time we have a push up, we have a test of the moving average. So although price is pushing against me, although it feels like this thing is turning around and we're going to go higher, on the 5 minute, we haven't got that signal just yet. So watch how price interacts, right? Because we push to the upside. This is the exact point where sellers have been coming in throughout the day. And if they come in here again, right, I get to at least see that happen. If we start to break up, I can get out of my trade, right? It's already been successful. But this is really how you hold that runner or hold the remaining part of your position into the target, into bigger profits. You can see that we start to reject, right? And we do not hold a higher low here. The moving averages are unable to cross over. Price isn't able to break and hold and continue above them. The 5 minute never breaks out. The 15 minute starts to show rejection. And then at this point, we can speed it up. You never have a full reason to get out of this trade before it hits target. So like I said, if you're exiting in here at 80% profit, if you're exiting it here at 100% profit, right? If you're keeping your average winner larger than your average loser and you're sticking to your system, you're fine. You don't have to hit your target every time. You don't have to get 100% profit every time. But for those of us that may be holding multiple positions, for those of us that may be holding runners or maybe, 1 day plus expiration options contracts, you really want to be focusing on multiple time frames. It's going to help you stay in the trade longer. It's going to give you a view of the bigger picture, and it's going to help you stay objective. And as we can see, the 5-minute downtrend never broke. These contracts went even below our target, even better than we expected. And we went for about, I think it was like 200 to 220% profit max on this move. So beautiful trade. Not all of them are going to be that clean, but you want a strategy set up so when they are that clean, you actually stay in the trade. That's about it, guys. Just a quick review. Expect more of these in the future, and I'll see you later.